Good afternoon, ladies and gentlemen. Welcome to the last session of the day. I hear the collective sigh of relief, but the session is designed to talk about professional owners, and the subtitle of that is, what is it that the brands hate about professional owners, what do they welcome about professional owners, and vice versa. The panel has been assembled to try to represent both points of view, and so we've succeeded in assembling a panel that has 2.5 owners and 1.5 operators. You'll understand why I say that when I introduce the panel. So immediately to my right is Jean-Philippe, JP. Jean-Philippe Chaumet is founder and Chief Executive Officer of Algonquin, who, as you will all know, are a major investor and fund manager in our area of activity. To his right, and clearly, therefore, Jean-Philippe represents a pure owner. To his right is Nick Smart, who's never been described as a pure anything that I'm aware of, but
I know I've been quite a few pure things.
but is Vice President of Development for Hilton, and therefore clearly representing the operator's perspective this afternoon. And then it gets complicated because Jean Ozinger is Chief Operating Officer of Hotel Invest and is therefore, as you would imagine, a absolutely pure owner, except that that is an Accor company and therefore has a foot in each camp. So he is ideally positioned to vacillate between both opinions as we go through the afternoon.
Which means we can all slag you off.
Yeah, exactly. And then playing on the right wing, from my perspective, left wing from your perspective, I guess, Keith Evans, Vice President of Starwood Capital. Needing no introduction, Starwood Capital has been extremely active, particularly in the UK, having acquired a number of portfolios of hotels, and therefore very clearly represents the owner's perspective. So the question, as has been said, is what do the introduction of professional owners mean to the relationships? I'm sure those of you that have been in the sector for any length of time will have noticed the sort of evolution of the relationships within the sector. Certainly 15 years ago, when I was a development executive, certainly 15 years ago, we started to see the change of ownership structure in Europe to the American structure that had already taken place, the bricks and brains split, as it became known, which was really as a result of pressure upon the operators, who were at that time primarily the owners of hotels, to really improve their return on capital. And so they chose to do so by selling assets, but having devised management contracts to actually take control of the hotel operation back. And what we saw at that time was a great number of investors interested in coming into that sector, but with very strong property skills, but not necessarily hotel skills. We tried to keep it black magic by talking about RevPAR tests and FF&E reserves, not in the normal lexicon of property speculators and investors, and therefore there was this imbalance of knowledge, and that has evolved over time, where basically the operators were looking after the property on behalf of the owners, but now particularly in most recent years, and particularly with the advent of the American funds leading some of the charges, we are now seeing a much greater knowledge and understanding from owners. And that changes the nature of the relationship, and in part, I think, is the reason why we're seeing more growth in franchise than in management contracts. But having said all of that, what does it really mean at the coalface? What does it mean for the change in relationships? And if I may, I'll pose the question firstly to Nick in particular as pure operator and John as hybrid operator. Nick, we talk about professional owners, but surely you would love to see the owners remain as amateur as possible. I mean, you know, I wouldn't accuse you of doing it, but predecessors at Hilton have been guilty of pushing contracts across the table and saying, just sign there and we'll look after everything for you. Isn't that where you'd prefer them to be?
I can see you're going to be very mischievous throughout this. You start as you mean to go on, Clive. That's very good. Yes, I mean, I should love never to get out of bed and for Hilton just to send the check. Better still if they pay me for not even doing any deals. But it's not going to happen. Amateur and this business don't really belong in the same sentence. We really want to engage with good, knowledgeable owners. I mean, number one, it's not about doing deals for the sake of doing deals. It's about doing the right deals with the right partners. There's nothing that inhibits success more than failed deals. And equally, successful deals feed on themselves and you get traction, particularly important for us in growing brands. So no, it's not a question of you live in blissful ignorance, send us the check and we'll handle the rest. It's much more of a partnership. You know you're being mischievous. I shall take you to task later. So no, I'm not going for that bait.
And John, as a hybrid, what's your view?
Well,
is professionalism what you want to be seen to be introducing into the sector?
Well, I think it depends what kind of rent I'm paying. Sorry for the owners here, but no, seriously, I think having done a few sell and leaseback transactions for the Accor Group in the late 90s, when we actually started to go to the asset-light direction, you know, it's a different world now, I would say. I think most of the owners we talk to now, I mean, I have about 1,000 leases, so I'm a big tenant, and we have a lot of landlords, some are in the room here, so I'll be careful about what I'm saying. But no, I think they're becoming more sophisticated, and I think the trend is really going from the traditional fixed lease, index linked, to a first trend which was variable leases, more linked to the turnover, and now going to more management contracts, because simply the compression of cap rates, yields are getting lower and lower, and investors are seeking to get better results. So we see a shift from moving from fixed to variable to management contracts. And the reason is quite simple. The investors want to be aligned with the business. They want to know what's going on. They are much more aware of how the hotel operates, I would say. So they're much more educated than they might have been 10 or 15 years ago. So that's quite a big shift, And what they probably perceive is that they can benefit more from the activity by being more exposed to a management contract, which means taking risk, of course, because you own the people. So that's the first trend, and just to make the link on what I am doing is, of course, I'm trying to reduce the burden of the leases we have at Accor. I mean, it's a statement we made, and this is a trend we're going forward to. But we like to be owners. Accor has a long-standing history of being a landlord, being a developer. In the late 90s, we owned about 60% of our portfolio. It's gone down to now about 400 hotels being owned out of the 4,000 we operate worldwide. So we want to get the balance a little bit in the other direction, and simply because we want to have flexibility. We want to be aware of what's happening around us. There's a lot of talks about digital, how it's impacting our business. So we need to be more agile, more reactive. And by being an owner, it allows to do so. Of course, it's capital intensive, but we have the capital means to do it, and we'll continue that way. So to answer your question, yes, I'd prefer professional owners because it's easier to talk to them.
But coming from a company where the mere mention of the word lease is career inhibiting, if you're moving from fixed to more variable leases management agreement, does that mean there's a bit more transparency in those agreements?
Well, I think they've always been transparent, but
really?
I'll invite you to talk to our people. So if you want an operator, we have some in the room here who can help you run
leases and transparency.
No, but we
Where does management agreements and transparency?
Oh yeah. No, you see to that, Clive. You see to that.
No, but I go a step further because of course, I want to own the assets and not lease them, obviously. And we have our other division, Hotel Services, who is the franchisee, and with whom we have a management contract. So, they both work well together, and it depends on the sector, the geography, and sometimes it's more appropriate to sign a franchise or a management agreement, and sometimes it's much more interesting to own and operate. So, especially
Keith,
in Europe.
Jean-Philippe, if I could pose the reverse question to you guys, I guess. Aren't you better leaving the intelligent stuff, the hotel operations, to the operators and concentrate on lease renewals and rent appeals and things like that? Why do you want to dabble in the hotel operations?
I don't think I have a microphone. Can you hear me okay? If you have a microphone, that'd be great anyways. Go And it's fair to say that we are very much an active investor. We take that approach to our hotels and to our partnerships.
Maybe I can take over from you while you're... Well, I think answering your question, Clive, I wish we could just sit on our hands and receive rent, but the world has changed, as John said. In fact, today, I mean, in my group, for instance, out of about 50 hotels, I think we receive rents on 3 of them. The extreme majority of the hotels we own are either under management contract or under franchises. If I leave franchise on the side and looking really at, I think what's the main topic of this is management contract, I think that as owners, we owe to ourselves and to our co-investors to be actively engaging with the operators within the limits of the contractual agreement that the management contract is, but sometimes very much beyond that, especially, of course, when you're talking about investment programs, capex that go beyond the simple FF&E reserve reinvestment. So clearly for us, the fact of owning hotels today is truly to be exposed to every single risk that the hoteliers is or are being subject to. And therefore, it is not possible, I think, to imagine a serious owner of a hotel today under management contract not to acquire through its own resources or third parties a professional view on hotel management, on yield management, on human resources. And that is clearly part of the industry as it has morphed over the past 10 years. And I don't see any U-turn from that. I think it's going to become even more of a partnership between owner and operator. And it's typically a partnership where there is a lot of shrieking and a lot of bickering, but very often, if it's based on professional information on both sides, it can lead to very interesting stories.
Keith?
Yeah, just to follow on that, I think, you know, we obviously value our partners extremely highly. We are active investors. We bring a lot to the table other than just financial acumen or transaction structuring or capital market awareness. We do get very much involved on the revenue management side, e-commerce strategy, distribution, branding, and design and development and CapEx projects. And we work very closely with our partners to the extent where we have hotel management agreements, but also we have a long history of creating hotel companies, owning hotel companies, and building on hotel companies and brands. So we take some of that track record in history that's really kind of built across our team and across our global footprint, and really just kind of put that into each and every even asset deal that we do, or portfolio deal, or joint venture partnership. So we try to basically just add value alongside the partnership, bring in some of our internal capabilities that can really put a cutting edge on some of the parts of the operating strategy that we focus on, and revenue management is one of those areas that we're very, very keen on. And I would say that's, you know, a part of the recipe to how we approach the partnerships.
Thank you.
So, Clive,
sorry, if I
all
can-
your owners were doing management agreements there.
Yes?
What sense does that make of your opening remarks?
I would still argue that owners becoming more professional means they're becoming more involved, and the natural evolution of that is owners saying, well, what I really want from you, Nick, is your brand strength, your distribution, your Hilton Honors program. But actually, I don't want to be sitting across the table from a financial controller arguing about central recharges. I don't want to be sitting across the table from a general manager whose career is actually within Hilton and is not defined by my asset. So I want a greater degree of control, which you might argue that well-managed, well-asset managed management contracts give you, but I do think the evolution is towards more and more franchise arrangements. And only time will tell if I'm right.
But you talk of, though, it's the death of the management agreement.
No.
And you know, it's like we should all be in mourning, and yet we across all our brands, in last year in 11 different territories in my patch, management agreements were getting signed. But it's interesting who they were getting signed by. And by and large, it was, as these gentlemen, highly experienced people who understand the risk rewards, understand the nature of a management agreement and where risk primarily resides, although it's a much more equal environment now. There has to be some sort of alignment of that. And in those circumstances, and in particular markets, you're potentially leaving a lot of EBITDA on the table in a lease or some of these other structures versus a management agreement.
I would certainly agree with you there. I mean, I did speak on something else yesterday, slightly outside the conference, and I was first to admit there is not rational evidence to show that a franchise provides greater profit to the bottom line than a management agreement. There just isn't a body of evidence to support that. Now, you could argue that's because franchises have always operated in the lower sectors as opposed to management agreements in mid-sectors with higher rates and room rates and therefore higher GOPs. I would also argue that there is not a strong rationale for saying that the fee structure under franchises is any different from management contracts. I mean, you and I could probably do a deal at 6% rooms revenue for a franchise. What is that, 4.5% of total revenue? What's that, 2.5 plus 10 if you structured it as a management agreement? So I don't think there's an overwhelming economic rationale, but I do think emotionally and evolution-wise, we're moving towards greater degree of control. Can I just say, ladies and gentlemen, there will be time for questions and answers at the end, I promise, but you are more than welcome to interject with questions. There isn't a microphone, unfortunately, available, but there are question forms if you feel embarrassed. But nonetheless, we have a question at the front. So.
Yeah, one thing I see missing at the table is third-party management. So myself, we had 8 hotels under a management agreement, and we broke it and went to created a third-party management company, and that's how we're managing our hotels. But when I look at the big brand owners and their management contracts, limited access to information, no really strong financial KPIs that they need to meet, 20 or 30-year agreements.
Oh, you got some of the short ones then.
What's compelling about that? So I think that there's
Obviously talking to the wrong operator.
very possible. But I do see a lot of value in management, in having professional management managing the hotels. I certainly don't want to do it. I just want to have good asset management above it. But I don't want to build something for $20 or $30 million and just throw the keys to the car to them and say, okay, well, send me your monthly report.
Well, thank you, because that's led nicely into the next question I was going to pose to Jean-Philippe and to Keith primarily. When a developer brings you a deal that they want you to get involved in ownership and funding and so on, what are the key elements that you would look to be in that deal to give you the element of degree of control that you look for?
On development, I can answer very quickly. I don't do developments. I've never built a hotel room in my life, and I'm quite proud of that. I buy hotels, and I extensively renovate them, and I renegotiate contracts or change flags. So, in a sense, I can answer to a large part of your questions, but not to the VP development of a major brand, more to an operator who would want this hotel that I just bought, that I'm going to enter into a large capital expenditure program, either to put it back on the right footing or to increase clearly its range, its specs, from a 3-star to a 4-star, from a 4 to a 5. What clearly I bring to the table, apart from being able to sign a contract that will have him derive fees, is clearly capex. And I think that's the main key. My personal opinion is that the main key to a successful relationship between an operator and a professional owner starts with capexes. Because you can always argue many things about a management contract. Once you have bought a hotel, you basically are in a situation where for 20 or 30 years, the manager could very well say, listen, we are going to apply the very letter of the management contract. Don't call me, I'll call you and I'll send you monthly reports. In fact, it never happens like this. Unless, of course, you're an accidental owner, but that's clearly off, I think, the topic of today. If you're a professional owner, you are going to have a multi-pronged relationship with the particular operator. Probably you have between 6 and 15, 20 hotels with them. So whatever goes wrong on this hotel, they'll pay sometime later on another hotel. And the second thing that brings, I think, people to their senses and to a fruitful cooperation around the table is CapEx. If you engaged in a PIP, then you can be sure that everything that's written in the contract becomes quite irrelevant, because all the hoteliers today, especially Europe, where we have a major problem of low economic growth and aging assets, what makes a hotel desirable for a client is clearly whatever money you've been putting in it above and beyond FF&E reserve for the past 5 years. And I would even add that if you do it during a recessionary time, which is really what I like to do, I like to invest in hotels when they actually are struggling. Because if you do it when they do well, it's over, because the guy on the other hand of the road, if he has been renovating hotels during a recession, will just leave you completely behind in terms of RevPAR growth. And the CapEx discussion with an operator is really where, between professional owners and operators, you're talking, you stop talking bullshit, you're talking product, and that is actually something where a true relationship is being built, relationship that very often goes on fairly well beyond the program itself. I think the main thing that makes a professional owner desirable for a manager, an operator, is CapEx.
Just to follow on to the same question, I think probably in terms of a development pitch coming to my desk, one of the few key things that certainly I'll be looking for is alignment of interest. And alignment of interest takes many forms, but it definitely puts a level of commitment on the operator side. It puts a level of shared risk and flexibility. Alignment of interest shows some kind of skin in the game, whether it's subordination of fees, key money, minority interest investment, et cetera, et cetera. They're not all required in one basket, but it's a combination of those factors, and that's just to show that there's a real kind of sense of commitment and conviction on the deal itself. And the other side is a very clear turnaround story. So as a private equity investor, we're looking to add value relatively quickly. So if I'm receiving a development pitch, and typically we don't do a lot of kind of greenfield development, but a lot of conversion opportunities, rebranding, CapEx plays, and et cetera, then that turnaround story needs to have a lot of conviction as well. So hard data points, it needs to show why their brand or why their operating strategy is going to be different from the former operating strategy. What's the CapEx plan? Hard data points, preferably from their own let's say managed network if it's a capital city. Most of the big operators have a number of hotels in that market, so you can really kind of pinpoint where the KPIs are going to go, a real clean cost strategy, a revenue management strategy. So not just a 5-year, 4-line feasibility plan with a 25-year HMA contract. It's actually proper alignment, looking at it from the investor's perspective, looking at it as a partnership perspective, recognizing the needs of an owner. And then the other side is making sure that the operator gets their fair share of the upside as well. So it's not a one-way street, it's a two-way street. So for me, it's having that combination of alignment and a clear turnaround strategy that's implementable.
Nick, what, within a management contract primarily, but within any relationship, what degree of involvement are you going to tolerate or encourage from owners? What about the budget setting process? Do you think that's a mutual discussion?
Totally. I mean, it's no longer even an issue. You could try and pretend otherwise, talk to the face because the hand ain't listening, but basically every owner is going to be all over like that like a rash, or every asset manager and all their support teams. And I think the more self-assured, more confident you are in yourself as an operator, the more you welcome that. You don't view it as a hassle, as it's a collaborative process to get the most out of the business. That's just a fact of play today. There is a balance to be had from that, because I think it can be pushed to the point of just total interference, and maybe we can talk about that a little later. But involvement in the budget, absolutely, in the review process. And in these discussions around not just the P&L, but the CapEx and all these other things.
I would maybe, Nick, if I can add something. I mean, the organization at Accor between Hotel Service, Hotel Invest, it's 1 year old, so it's a very young, new setting. I think the biggest challenge we had in the first year is just that, to put ourselves in the minds of owners and looking at our colleagues, because we're in the same company, obviously, but from Hotel Services as the operator manager, so to speak. And a lot of work went into the CapEx discussions, because we have a different sense of what's a priority. I mean, we all want new bars, new restaurants, meeting rooms, change the beds, the bathrooms, etc., etc. But you have also all the hidden charges which we don't talk about. Changing the air conditioning, the ventilation, the hard stuff no one sees, but which is costing a lot of money. So we spend a lot of time putting processes back into the system, just making sure that the discussions we have on these CapEx requirements are sort of balanced, but also geared towards, on the one side, the owner, who wants a long time and some value out of their properties, and the operator, so to speak, who wants to attract more clients to the hotels. We spend about 250 million a year on CapEx on the portfolio we manage, the 1,300 hotels. So it's a big feature. So we have to plan this ahead. It's not a 1 year issue. It's a 5 to 10 years issue, because you have to look long term. So, and you can do it when you own the assets. And likewise, from Hotel Services point of view, especially on management contracts, because I don't know the real figure, but it's probably 3,500 management contracts we have worldwide. About 1/3 at Hotel Invest, the other ones being with third parties, like you mentioned. And those are the most critical discussions I think we have twice a year. The first one is on the CapEx, probably towards the end of the year, and then the next one is on the results, in January, February, to see whether we match budget. But it's a key factor, and if there's transparency, if there's alignment between the two, it will work. If it's not prevalent in the discussions, it's going to be very difficult.
And Jean-Philippe, do you look for involvement, stroke control over key appointments, general managers, director of sales, financial controller?
Appointment, absolutely. And I would go even beyond that. When we buy a hotel, it has already its GM, and we assess the GM. And after 6 or 9 months of ownership, we may have an opinion on the GM that is not the opinion that the operator would want us to have, but we put the matter on the table anyway. And it has happened to us several times that we have argumented and proposed a change of GM with very clear reasons. I mean, it is not a whim, it's clearly pinpointing a lack of success or a lack of understanding of very important features. Revenue management comes to mind, and we've always obtained that. And I think it's again one of the benefits of being a professional owner and having a multi-asset relationship with an operator, is that an operator could get really upset if a party owning one hotel had decided to change the GM and wouldn't have actually the expertise to define with the operator what is the right GM we need at this particular time for this hotel. But if you have 10 hotels, and even if it doesn't say in the management contract, I think I read management contracts only once in the life of an investment, when I buy. After that, I never open it. I think it's irrelevant, almost. If it has
really upset a number of lawyers in this room.
that's actually.
They actually think you dust it off every 6 months for a damn good read.
I want to be very precise. Very precisely, it is very important to have a good management contract, obviously. Once you have realized it's a good management contract, never open it again, because most of the common life between an owner and an operator are going to be slightly outside the scope of what the management contract says. Thank you, because it's just, life wouldn't be fun. So on the GM, I think it's very important. It has happened to us, and I think very often the operator, when you have really high doubts about the GM, it's quite rare that the operator doesn't actually share these doubts, but there are career paths, and there are 10 years, and you stay 3 years, you stay 4 years. Well, if the hotel is not exactly the one that fits for the particular GM at the time in his career, we will try to accelerate that, and we succeed. However, On finance director, on I would say operations director, we don't wish to have a say. We think that these profiles typically fit well when the GM is good. Another specialty where we are very keen on changing when it's not good is revenue manager. And I actually also have a problem very often on pooled revenue manager. If the hotel is big enough, you want to have your own revenue manager and not necessarily a revenue manager that is sitting in an office and basically addressing 5 or 6 hotels. Because 5 or 6 hotels from the same operator, you may have some conflict of interest. If I own the 5 or 6 of them in the city, that's great, but it never is the case. So I think the revenue manager, as much as possible, has to be an employee of your asset and not a shared employee.
Nick, you've already persuaded the audience that you're very reasonable in your approach to all management agreements.
I hope
but what is it that really gets under your skin when someone comes to the table and argues a bloody point that really gets to you, or later on in life keeps bringing up the same point in the relationship? When does a professional owner become a nuisance?
I better be as diplomatic as I can be a little bit. I think I'd like to come back to that general manager point in a minute, but I'll answer your question. I think we have a lot of noise and statistics and damn lies in reviews. And I was quite amused by the Winston Churchill quoting about one of his colleagues that used information like a drunk uses a lamppost to be leant on, but not for illumination. I sort of wonder just how much of what we're asked to measure is really relevant. There are a few key things, and you and your colleagues sometimes add to that in spades, where you keep digging and digging and digging for,
Usually because we know
taking up endless hours, wasting endless hours.
Something buried there, really.
For what effect, really? It's the blinding flash of the obvious, what the key drivers were. Yeah. But anyway, far be it for me to say I hate, that's too strong. Yeah. But just coming back to the management conversation, I think where most people would agree is the results of a hotel are very interrelated with the leadership within the hotel, and the general manager in particular provides at least 50%, if not more, of that. It's an absolutely critical appointment where you see, I've never seen a successful hotel that didn't have a good general manager. I don't believe it's possible. It's still, regardless of whether you're third party or a big brand, a tremendous pinch point, attracting that talent, nurturing that talent, retaining that talent, giving that talent opportunity. And I do think that whilst obviously there are some negatives of big companies, one of the things that we do play pretty hard is having that availability of talent to cover off these options, because we're in an environment where people are growing very quickly, a lot of conversion. It's a very finite resource, good leadership and management. It's something that we would pride ourselves on. We work very hard on putting that in front of owners and giving you a choice. And it's only right and proper that it's a collaborative decision.
Keith, by the same token of what really gets under the skin of an operator, as an owner, what do you find that operators balk at that just annoys you and frustrates you?
I don't know if annoy or frustrate is the right word, but probably one of the issues that, hi Nick, that takes quite a bit of a conversation. It's a bit of a changing of the chip over time. Is when you're entering into new agreements with new operating partners, and it does go back to this alignment, but in the end, what it really is ensuring that as owner of the hotel and the real estate, and hence taking the lion's share of the financial risk in terms of your investment and your exit and your proceeds during the whole period, is that you really need to have some flexibility in terms of termination rights on the management contract. So the days of having 20, 25-year management contracts which is just locked in like a perpetual relationship with low visibility or low transparency, I think doesn't really fit the needs of a lot of investors at the moment. So I think from an operator perspective, you clearly would like to have a contract as long as possible and know that you're there. I think the performance test mechanisms that have started to come into management contracts are helpful. They're good. They definitely play a role. But I think also on exit, an investor really needs to be able to realize and optimize the maximum value. So that requires a vacant possession scenario on your sale. So it doesn't mean that the next buyer is absolutely going to be acquiring the hotel and changing the brand. If you're doing a great job operating the asset, most likely the buyer is going to want to retain you, but it's just having that optionality. So it's a difficult, I mean, some operators are much more ready to take on that and understand it and take it on board, and there's other ones that are still kind of pushing back on that. But I think from an investment perspective, it's having that flexibility is important. So I guess tenure is something that operators are looking for, and investors are just looking for flexibility to make sure they can optimize returns. So it's finding the balance in between there that's sometimes difficult.
And it is interesting, Keith, as you say, how that has evolved again over the years of the management contract, because certainly in the early management contracts, you were negotiating non-disturbance agreements because the banks in particular, the funders, and to some extent the investors, were saying, if this goes wrong and we have to enforce, we want to make sure that the brand cannot possibly walk away. Mm-hmm. We want you there as our comfort blanket. Mm-hmm. And now the whole discussion of NDA is completely reversed, with the brand saying, well, you know, if this goes wrong, we've done nothing wrong, we want to be there. And the banks are saying, no, if I've got to sell this, I want a clear run at it with vacant possession.
No, I'm not sure I agree with that. No, there's still banks that are concerned that there's a good operator left to. You know,
well, we'll educate the remaining ones soon.
That's a little bit of an agenda there, Clive.
No. Quite generally, I do think I've seen how that has evolved, Nick. Where the banks would not have contemplated funding an agreement or purchase without real control that the brand couldn't walk away. But now, because of the inherent value in vacant possession or the flexibility to offer vacant possession, I think it has become a cause célèbre on the other side.
Cutting to the chase, it's a difficult balancing act because owners want to join systems that are strong, robust, have rules, have standards, and that are applied equitably amongst everybody else. It's kind of like, a club. And if everybody could leave or set up their own terms, or generally not have them apply to them, or do as they wish, it's not much of a club, is it? It's kind of, I wouldn't want to become any member. What's that quote? I wouldn't want to become a member of a club that would have me.
Would have me, yeah, that's right.
And so it's all part of that. And one of the key elements in that is term. And to what extent you can be out. This is, I think, and we have absolutely no problem working with third-party operating companies as a huge part of the growth. That's back to what's driving a lot of the franchising. Have been there for some time in America, have emerged very dramatically throughout Europe and elsewhere, but in particular in Europe, and that's in part because they meet some of the needs that you're talking about, particularly as relates to term and termination.
Jean-Philippe, without naming names, describe your favourite operators. What do they do for you?
Well, I mean, without naming names, it's definitely Hilton.
I am very fond of you, but we're the only brand you're not with.
That's why you're his favourite.
Only frigging brand
That's
you're
why
not
you're my
with,
favourite.
That says a lot about the ones he's with, then, Nick.
I love the man, but really.
No, I would say that I have no particular favorite. I think that the most important thing is the brands who have realized that it's very difficult to constantly remind the market that you're asset light, and not to be willing to discuss and listen to people who are asset heavy. And we are asset heavy. We have the money. So as long as the operators do understand that it's impossible to want to have, as in French we would say, le beurre et l'argent du beurre, the butter and the money from the butter, you have to realize that today in the asset light world, the owner must be a partner, and again, all the little bickering that happens all year long is actually not really, it's just noise to me. The important thing is, are we working well with all of our operators? Yes. Have I ever had a situation where I felt that the entire company, across its brands, had it wrong? No, never. and I don't see why it would change. I think that the times of the intolerant operator is definitely gone.
Nick, I'll give you the opportunity to reciprocate, and then John as well.
Any owner that has seen the light and come over from Sheraton or Marriott and decides to come into the Hilton fold, in particular French entrepreneurs running operating companies under multiple brands, they're very much my favorite owners. Yeah? Just as soon as they see the light, I'll show the love. But no, all joking aside, our owners that really are in for the long term, understand the business, are really professional about it in the ways that we've been talking about, become great partners. And you can't just grow, I agree, it's collaborative. You can't grow fast a system just by having good brands. It's also about having the right partners. Absolutely, we agree that 110%. And I think the heartening thing from my point of view, when I started development, obviously, despite my youthful good looks, I'm very young, we weren't even a proper asset class. We spent the whole time being behind residential and offices. Nobody would really understand the cyclical nature of hotels. It looked very, very risky and very uncertain about it all. Very few advisors around to advise, or anybody else. And here today, who could believe it, in a relatively short period of time? We're a proper asset class with a lot of capital chasing it, well understood. It's unbelievable. But at the heart of that has obviously had to, all joking aside, professionalism. Professionalism of brand and operator, absolutely, and accountability that wasn't there before, spurred on with owners that really understand the business, are not playing at its core to their endeavours, and a raft of advisors likewise that have developed, including third-party operating companies. It's all gone up several notches. It's a very different landscape from even 10 years ago. It's unbelievable, really.
And maybe Nick, sorry to intervene, because I happen to be a tenant as well, and we have, like I said, 1,000 properties, but we're lucky enough to have roughly, I would say 50% of this portfolio with 4 or 5 major owners. So I think partnership, alignment, accountability are probably the good words to describe the best relation we can get. What we have set up is frequent partnership committees with all these owners, be if they're French or if they're not French, but whatever. And they really help us to convey the problems we might have. The CapEx issues we discussed before, but also a general manager issue, if there is one. How is digital affecting the business? We're very adamant that we need to be informed as owner or as tenant on what the operator is going to bring in terms of distribution, how this is going to affect our business, because at the end of the day, it affects the value of the real estate you have. So, of course, as an owner, we want this value to increase over time. And as a tenant, you're participating in a sense to create this value. But don't forget the operator as well. The brand is creating a lot of value. And, this day and age, we talk more probably about digital than brands. But let's not forget, that the brands are the cornerstone of what we do. So I'm lucky enough to have a great operator, a lot of brands. It gives me a lot of flexibility, because sometimes we can change brands if for some reasons the brand doesn't fit the location anymore. So that gives us the flexibility we need.
Presumably it's a core brand, your flexibility.
Yes, of course. Unfortunately, well, I'm quite happy to take over a Hilton property if the management contract is not too long. We'll take it over. So we've done it before, and we've taken over other brands as well. But it's really accountability is a strong word, I guess, and partnership alignment. If we can get that to work on the same hymn sheet, the partnership will work. And be it with third-party owners or with a more direct or close owner.
And Keith, I started by asking Jean-Philippe to describe his favourite operator. Describe the operator that annoys you most in trying to do a deal.
Well, I'm being turned into the bad guy here.
Yeah.
No particular operator. No, I just think, for me, it's so important that the operators are taking a commercial approach to things, and the way the business investments are run are evolving over time. So I think operating agreements and the dialogue around those negotiations needs to evolve as well. And I think most operators are very much actively pursuing that path. But really what I would say in terms of annoying is, again, the worst thing you want to do is enter into a very long-term management contract with limited transparency, no real ability to navigate through the operations or have an influence on the performance, and be stuck with an encumbered asset for 20 years. I mean, that's really something that's value destructive. So those types of arrangements are things that we don't look at.
Thank you. Ladies and gentlemen, I'm going to throw the baton to you. I've deliberately, with my colleagues, left 10 minutes for questions and answers, and we'd be delighted to try to answer those. Otherwise, we can all retire to the bar early. The choice is yours. So, are there any questions that we haven't covered adequately that you'd like to throw at us? Yeah, please.
I'd like to know, see how the operators can actually embrace the open dialogue with their owners. At what point in time do you think all the reporting actually on the performance of the investment gets in the way of you actually focusing on the performance? And especially as you have an increasingly sophisticated ownership base, all kinds of advisors involved, you have ever more lists of questions to report on, which takes away your focus on the actual operation of the hotel. What's the right balance? Is it for...
Oh my goodness, if we could, that's a good question. If we could answer that, as 20 operators just itching to say something in the audience. But I mean, there is a balancing act between good data, involvement and transparency in the business, and then just outright interference. At some point, you've got to let the driver drive the car. And be accountable for that. But I think that's where the sort of partnership and experience comes in, because as Jean-Philippe said earlier, it's quite often the case now that there's multiple, we're not just dealing with one asset with an owner, but across multiple assets, and have established quite long-term relationships with them and found the sweet spot. But I would say with a new owner, finding that spot. I mean, I'm pontificating about something I know absolutely nothing, but I do that very well. My operating colleagues here, I think, would find that there is an element of finding that sweet spot, and it's not with a view that we want to keep information away. That's no longer possible. It's not that we're not for transparency. It's just about getting on and having the ability to run the business efficiently. Yeah? There are lots of mechanisms. I mean, I do think sometimes, not that I would ever in any way take a pot at Clive, who I love, a great man, but somehow as asset managers start to sort of morph into other things, there are now becoming some conflicts of interest. I'm waiting for the day that the asset manager actually runs an operator selection panel, is actually on one of the blooming operators. And that there's demands of them to justify their existence, to add value, and that can manifest itself in still more reports and more questions. And would you take a look at this? At what point do we say, that's your job, Clive? Our job is this. Yeah, we do it together. Yeah, so yeah. It's a tricky one.
There clearly isn't a clean answer to your question. There can't be. I mean, I guess if you're arguing about the size of the bar of soap for 20 minutes and forgetting to look at the RevPAR numbers, then the whole discussion is focused in the wrong place.
Drunks and lampposts. Yeah. Think drunks and lampposts. Use the figures for illumination, not just to lead on. We're human beings. There are also issues that go on. An operator will sometimes try to bury bad news, and you've got to dig for a long time to dig it out. And I think you're getting confused with the Labour government.
And that's time-consuming. But equally, an owner will use a point mischievously. If an owner wants to disturb a relationship, wants to break a relationship, equally they can be as guilty of digging away at something that is irrelevant in the overall context but it's only relevant because they have another agenda. And none of that is beneficial to the hotel. Is there another question? In that case, ladies and gentlemen, if I may, on your behalf, I'd like to thank the panel, who I hope thank you very much.